Hey everyone, welcome to a live edition of the Promo Minds podcast. I'm your host, Steve Leslie, and today we're doing something that's completely out of my wheelhouse. I haven't done a live recording in quite some time, so bear with me. I just thought we have an interesting topic to speak on, and I am really excited to do it. And so the effects of higher interest rates I've seen firsthand in the last couple years. And so, talking about the recently posted article in the Vancouver Sun, where they had Carolyn Rogers of the Bank of Canada, she's like the number two person there, talk about how higher interest rates could be staying around for quite some time. Now, before you get panicked and whatnot, um, I also want to remind you that Tiff McCallum or Macklem, the guy who's representing Canada's central bank, the Bank of Canada, back in 2020 said that low interest rates were going to be around for a long time, which a long time ended up being about 18 months. So I guess it depends on your definition of what a long time means. But I'm excited to talk about this, and I'm this is kind of new to me, like I said. So please, if you do have any comments or questions, feel free to post them, and I'm gonna try to get to everyone as much as I can. And we might not even have any comments because it's the first one, so that's fine too. Anyways, thank you for tuning in, and we'll take a little break here and be right back. More from the Promo Minds podcast coming up shortly. Promo Minds. Promote your brand, transform your business. All right. So, as I said, Carolyn Rogers from the Bank of Canada, she was quoted in an article posted in the Vancouver Sun, which I believe was actually found first in Bloomberg News. But I have it here, and we'll pull it up here. So, interest rates may stay higher for good. And that's the Bank of Canada, Carolyn Rogers. Now, in this article, see if I can scroll down here. It's definitely worth taking a read in, but there is one specific part here where it says that rising longer term borrowing costs are adding to debt service costs for businesses and individuals, Rogers said, leaving less wiggle room for the financial system in the event of a shock like another sharp tightening of financial conditions. And then also went on to say, as a small open economy, Canada likely wouldn't be immune if a severe global stress were to reemerge and persist. And bear with me a sec. I'm just going to take that off. Okay, so yeah, higher interest rates obviously create a lot of issues financially for a lot of Canadians and small businesses and large businesses as well. It also creates a problem for the government too, because they have to pay interest on the debt that they already have, and that they're constantly spending more. As we saw earlier in this year, the federal liberal government announced another $40 billion in deficit, which is going to add to the spending. And it's kind of like you're trying to put out a fire and you keep throwing gasoline on it, or someone keeps throwing gasoline on it, as you're also using a fire extinguisher on it. So this isn't going to be more of a political talk because there's a lot of polarization there. And I'm sure that if you were to dig deep into the budget, there would be a lot of good and a lot of bad, and depending on what your stance is. So we're not going to get into that. But I'm just merely pointing it out that it's another $40 billion of deficit when you're trying to bring the cost of everything down with inflation by raising interest rates. So it's just one heck of a dance that's being played here. On top of that, you have more. When I said more government spending, when you look at the COVID years, there was obviously a lot of spending in year one, but then on top of that, the government grew by over 12% with new hirees, and just a lot of the things that they have done in the last couple of years has ended up costing more, and probably because inflation has come in, where we have a lot of people, not just government, but like in private sector too. Everyone is demanding wage increases to combat the inflation increases as well. So again, there's a lot of it's very messy out there. Um, Now, in terms of like the real estate market, the Canadian real estate market, um, for those of you who aren't aware of this, because I have people that watch in the states as well, and the Canadian mortgage, how that's set up is every at least once every 5 years, you have to renew your mortgage, which means you're going to renew at a likely a different rate. And so it could be you could get like a 1 year mortgage, you could get a 3 year mortgage. There's different products like that, but generally it's once every 5 years your mortgage is renewing. And so how the Canadian market is different than the American market is Americans are able to lock in, they have that option to lock in for the entirety of their mortgage, which could be like 30 years. So, personally, I have a place in the US, and it is, when I go and talk to my real estate agent down there, the first time that I went back after the pandemic, and we were talking about how the market has changed. In some respects, down there it hadn't really changed in that particular market. And anyone who's not versed in the American real estate market, just to give you a little uh, insight into that, it varies. It can vary drastically depending on the state, depending on the city, even depending on the neighborhood you're in. There's a lot of different factors that go into play. Whereas in the Canadian market, it's I don't know. There's not as much drastic change um, that you see, and so when I was having this conversation with my real estate agent down in the States, at the time, it was late 2022. And so interest rates had started rising at the start of the year. And I had just sold a property mid 2022. And I just started seeing the effects of the higher interest rates coming in, because people started getting a little concerned, but it was still low enough that they were expecting higher interest rates, but it wasn't a big deal. Now we're at 5% for the prime rate, and we're seeing higher rates than that, obviously, for different products that people can buy. And so as you move forward, we had an insane cycle in the real estate market throughout the pandemic where prices just exploded. And we were also seeing that explosion happening um, prior to the pandemic in a way, but it really took off in a more macro level across the nation throughout the pandemic, because money was super cheap, and people were spending it on acquiring new properties. So um, what I saw personally was I had a townhouse in London, and it doubled in value just prior to the pandemic. It had doubled in value in 2.5 years. And then following the pandemic, it raised even more. So it basically tripled in value over the period of like 5 or 6 years, which is insane. And on top of that, what we're seeing now, I guess, as it relates to higher interest rates now moving forward, especially hearing from the Bank of Canada saying that higher interest rates are likely going to be around for a long time, you have to start asking yourself, well, what is going to happen in these different markets? Because now you're at a new base level, but the whole reason that you were doing that, raising interest rates in the beginning, a portion of that was to bring down the cost of living to fight inflation, but also bring down the cost of houses. However, because of other policy, Canada has been drastically increasing the immigration into Canada at a rapid rate. So in like the last year, we've brought on another million people. And so you then have a lot of regulation where building new homes, you got to go through a lot of red tape. And so you can't keep up with the demand and you're drastically increasing the demand, but you can't even keep up with the demand even if, the immigration thing wasn't happening. So in turn, you still have high housing costs. In some regards, it has come down, but when you've essentially doubled or even tripled the price of homes, when you reduce it by say 20 or 25%, um, it might sound good on paper, but realistically, you're still up like 2x. So there's a lot of factors that come into play because obviously you have a lot of policies intact that you got to find a way to not just work around, but find the win-win, if that even exists anymore in the political landscape. But I I had many conversations towards the start of the year, or maybe midway through, in regards to the Canadian real estate market. And I was sharing why I got out of the Canadian real estate market. And the reason was because I said, yes, though you have um, sustainable appreciation, I guess, in the market, you also have uh, federal government policies that are really restricting the growth of the GDP. I guess you're focusing on other areas. You're trying to force people to buy electric, and again, that's a whole different topic. But um, you're forcing people to spend even more money trying to change um, a market. So there's different government policies that are in place that aren't really conductive to what you're trying to do, which is bring down the cost of living, bring down inflation. Whereas last year, this was a big topic as it related to energy. And we could have exported a lot of our energy into Europe to help offset the costs of heating their homes and to also help offset the profits that were going into Russia at the time. And again, I don't want to get so political, but it's hard not to get into politics when you're talking about the higher interest rates. So um, I can appreciate the will to go green. And I think I had this conversation with one of my professors in college years ago about how I really think that it's a very attractive thing to go after green technologies and to become more environmentally friendly and sustainable processes. It's just the way that it's marketed is do this or else, right? Which I understand to some degree, but there's definitely an attraction factor there of you're being innovative, you're coming up with these new technologies. It's just you also have to keep in mind that you're not set up for that currently, but you can set that as a goal. And so one of the things that I was questioning was, if you want to build the infrastructure and have, obviously offset the costs that have been incurred over the last couple of years by taking advantage of a situation, not in a negative sense, but actually helping other countries offset the cost of energy, we could export a lot of energy. And with the revenue and the taxes generated from the sale of that, we can then offset our own deficits, but then also put into place the infrastructure needed to go green in the next 10 years, or whatever the goal is that the government has. We can then have that goal of, we don't have it set out yet, but we have the goal to do it. And it's kind of like how JFK said back in the early 60s that the US was going to put a man on the moon by the end of the decade. And, you know, not to get into not to aggravate any conspiracy theorists, but by the end of the decade, as history says, that's what happened. So it's really about setting a goal and what can you do to work towards it. It's something that we've talked about on the show, you know, before. More in like a personal instance is just like, you set your goals. You might not be where you want to be today, but how do you go from where you are to where you want to be? What's the best vehicle to get there? Like, what's the plan, right? And you plan it out rather than just all of a sudden not having a plan and just switching day one. You're going to have a lot of pain that comes with it. So I think moving forward, there's definitely going to be some more pain associated with the higher interest rates because, like I said, there's mortgage renewals coming up. Our government policies just seem to be, I don't know. I don't personally understand, um, if you're trying to lower the cost of living and you're trying to lower inflation and subsequently take the burden off of Canadians. That's not solely based on the federal government. It's just there are things that they could be doing differently to help assist with that. Anyways, moving forward, I think that, like, Canada itself is a very rich country. Like, we have so many materials, we have resources. There's so much about this country, um, and I think going through hardships like this, we're going to figure out a way to become a to benefit everyone, right? Moving forward, it's just the higher interest rates right now are painful because there's a lot of people that they don't know, they don't have control over their spending, so they're taking on more bad debt, and they were probably already they're probably already taken on a lot of bad debt to begin with, especially during the pandemic. And then higher interest rates came in, which just perpetuated it, um, way more. So I think we're going to see a lot of defaults coming up. I think we're going to see a lot of people that are going to try to sell their places to get out of their mortgage renewals, or their mortgage renewal will happen and they won't be able to make the payments. So I think there's defaults coming. But the other side of that means that there's opportunity there for those who have been focused on the sidelines or are waiting with liquidity in hand to go into those markets. And so, um, like, I think retailers might see a big hit, but the more people that get out of home ownership, they got to live somewhere. So they're going to become there's going to be more renters, right? So there's going to be more opportunities to invest in the rental market. Now, um, my own personal opinion with that is, as it relates to the rental market, you have such high risk as it is right now because you have the cost of buying a house currently, excuse me, is way more than it was 6 years ago. The cost to carry that debt, way more than even 2 years ago. So everything is more expensive on that end. On top of that, you have, and this is one of the large reasons why I got out of the Canadian real estate market, is because, yes, I do think that you can sustain that appreciation to some degree with, you're bringing in more immigrants. Um, but the other side of that is when it comes to renters, you have, at least in Ontario here, you have um, the rent control in place, which I understand. However, when the cost of everything else has gone up substantially, 10, 15%, and a landlord is told that they can only increase their rents 2%, well, there's a disconnect there. So unless you have like a property that has cash flowing tremendously, so if you bought, you know, in the prior years of COVID, then the opportunity for that, yes, that's there, but it's really putting pressure on the landlords to be able to increase those rents, at least to keep up with inflation, because like hydro bills, gas bills, water bills, um, insurance, all these things are going up. So if you're only allowed to do maybe 2%, it's fine in the regular times where the Bank of Canada's target rate was 2% inflation. But when inflation is like over 10%, then it makes it a little more difficult to keep up with these things. So I think, it's a shaky thing, but I wanted to get out of the Canadian real estate market because there's more opportunity for me in the States. And obviously there's less uh, rent control. You can find states that don't have that, although there's more and more of that coming in. Um, and on top of that, the cost of buying a house down there is still, unless you go to like LA or Miami or some of the major metropolis areas, you can still find uh, really decent homes for really, really fair prices and hit those 1% rental targets, monthly rental targets. So there's a lot less risk involved because you're not spending as much on purchasing an asset. And then on top of that, you don't have the regulation. Well, you can find places that don't have the amount of regulation that you find in Ontario, and you're still going to see appreciation in some markets. There's going to be the cycle. There's going to be rocky times. There might be a huge rocky time, which is why you want to have an idea of what you're doing. But like I said, the risk factor just isn't there. So if something like up here has appreciated tremendously and you go into more of a rocky time, even with the immigration and whatnot, you could still have like a high, you could still maintain to some degree your housing price, I guess, or the asset value. It might come down a little bit, but I think it's going to be sustainable. It's just on the back end of things with all the government spending and our policies that are enacted, I just don't see the Canadian dollar staying, keeping the purchasing power or keeping up to the purchasing power of the US dollar, because there's more control at a state level. Um, like they have more control at a state level than they do with the federal level. Whereas in Canada, it seems like whatever the federal government says, the premiers then adapt. So yeah, it's definitely a fine balance. But like I said, Canada has a lot of tremendous resources. It's just um, figuring out how that plays out so that we can then offset our deficits. We can offset um, our spending, and we can increase the GDP. And if you can do that, that's going to assist in lowering the inflation, which then puts less pressure on the Bank of Canada for those interest rates. So, and like I said, I don't know what it means with when Carolyn Rogers said that higher interest rates are going to be around for a long time, because Tiff Macklem said the same thing about low interest rates, and it lasted like 18 months. So she could just be saying it's about 18 months to go. I don't know. But yeah, I wanted to share my thoughts on that, and I'm curious to see what you think. What does this mean for you? Um, when you get into the individual uh, debt to income ratios, like we're seeing a lot more debt. People are going to their credit cards and their lines of credit to help pay for basic things like groceries and to put gas in their car, to pay for their housing bills, and so the debt is going up. And you can find charts online where you see the debt to income ratio in Canada is just like it's gone way up. So it'll be interesting to see in the coming years, in the coming months. But you know, like anything, there's cycles. It's just how long will the cycle last? So if you have any questions or comments, feel free to share them. Either post them in the comments below, or you can send me an email at promominds@gmail.com. And yeah, this was cool. So thank you for tuning in, and yeah, we'll talk again. Take care.